Good afternoon, Scott Radler, T3 Live. Welcome to today's recap. Today is Thursday. Thank goodness that trader fiasco on the NASDAQ happened today versus yesterday. You know, if you turn on every TV set across the media outlet, you will see that, you know, everyone was so upset and so worried and, you can't be in the market, you can't trust the market, you can't do this and that. Meanwhile, you know, when it happened, I think the spiders went down 30, 40 cents and closed at the highs of the day. You know, unfortunately, it seemed like it was a little bit more of a pain in the you-know-what versus such a big deal because traders couldn't take lunch and you were stuck in some positions and, you know, basically you had to wait around for it to open up. But for a while, I don't even think anyone noticed because, you know, the volume has been so thin and so light and there's pretty much a lack of involvement regardless. But what you could have seen, though, is not to like really paint the picture, but the market had every reason to sell off, right? The market could have fallen apart. It could have been down 100 on the Dow. Oh my goodness, another flash crash. We can't get out of our positions. And meanwhile, after about 10, 15 minutes, it regrouped, was strong, closed near the highs of the day. So that tells me, you know, that perhaps this oversold bounce, this little pivot that we've been navigating, could have some more upside, you know, for cash flow. Some more upside, maybe the end of the month is next week, and, you know, they wants to float a little bit to the upside while, you know, some of the data around the world continues to be positive. Again, the whole hawkish tone, which people don't even think was that hawkish for the minutes, was 30 days ago. So maybe in Jackson Hole, they're a little less hawkish. So either which way, markets try to, I would say, penetrate a little bit through resistance and and it almost did. So at this point, with the way some of the key stocks are acting, I think, you know, from neutral to negative, maybe to neutral to positive for the next few days at least, while we have a little bit of room till we get to some real bigger resistance. You look at the chart of the spiders, you will see that overall, you know, here's a trend that's been intact since November. Okay, here is your 50-day that we, you know, closed above. You want to put the 100-day in, which we did not touch, okay, which a lot of people were saying, you know, including me, that perhaps we needed to see it, and we did not yet, or not. And with that said, that's right here. So you take a closer look and look at this lower pivot. All right, here is your lower pivot. So for today, you would say the bulls somewhat have control. What did it do? It was able to close a little bit above yesterday's high and maybe even the day before, somewhere around there, and could test this gap, which comes in around 167.30, which isn't a lot, but $1.20 in the spiders is, you know, better than a sharp stick in the you-know-what. But anyway, with that said, that's where we seem we could be headed. Okay, you have room here till that gap. You know, this was your head and shoulders top, which we've talked about many times, and, you know, we broke below it. We talked about looking for a tactical long within here, and now there seems like there is some data for that. With that said, IWM, look at that. This actually is one of the strongest sectors, and it's already in this gap. So it's basically where, if the spiders were at 167.30, it would be equal to where the IWM is versus this gap. So pretty strong. So somewhat of a bullish sign. You go to tech, some of the go-to names. Tesla, look at that. Boom. All right, we talk about strong trends. We talk about this stock holding the 21-day moving average here. Missed it by a day, but then had the red dog reversal for a new entry. Consolidated right here. Then you had your earnings, but the market was a little soft. Came in, what did it do? Oh my goodness, held the 21-day, and now look at it. So in my opinion, it doesn't seem like there's much in its way from making historic highs, you know, before month's end, which could be 160 plus. Overall, very strong trend, and what we've said many times, and I'll say it again, that major winners that could be doubles or triples that happen from new issues that come public within the last year or two typically have high valuations. I know it's scary. Woo-hoo. I know the PEs, you know, is high, but they tend to grow into them. We've seen that in LinkedIn. We've seen that in so many different, even Google had a high PE when it ran from 100 to 900 or whatever it was. But they grow into their PE, their valuations, because they're able to ramp up earnings. And that's why people pay for the growth. But anyway, when you're trading these things, you stay in them as long as the trend is strong. If the trend changes, you get out of the way. If it stays the same, you stay with it. As far as other stocks that people were trading today, you know, actually it's something a little different. Amazon, Amazon still, you know, hanging on to this 285 level as much as it possibly can. Had a day one, so maybe this is worth a little bit more activity up to 292-ish or so. This was your breakout failure, and now it's looking pretty good, edging above. So maybe it wants to see 292-ish. right around here for a summer trade. Google, still lethargic, still working its way higher. We talked about this stock breaking this level here, okay, which might have gotten some people out of it. This was a little bit of a wedge pattern that resolved to the downside. Plus, you had this outside day. But if you bought here when it started to look a little bit better, you still have some room. Perhaps it works its way back up to this area, which wouldn't be much, but it's something to do. Apple, Carl Icahn came out, talked about maybe a buyback. He's having some kind of matzo ball soup and latkes with Tim Cook or lunch. Anyway, with that said, here is your inside range here. It looked as if it was going to break below this 582. It did short term, but ultimately what has it done to let the 8-day catch up? You've had a really strong trend. This was your change of composure when it gapped up and continued. This is when it took back the 200-day, so nice little flag here. If it were to start getting above 507, perhaps we see new move highs into the invitation that comes out September 10th. Overall, I know it wasn't really strong on a big up day, but again, it's consolidating and it was a little extended, so it still, in my opinion, looks good. Same with Facebook, right? Facebook, big gap up after earnings right here. Little continuation above the earnings high. Wedged here, didn't have enough power, went to the downside, regrouped, and now it's all the way right back here, hovering. I know today it didn't make new highs with the market strength, but it still looks pretty darn good in my opinion. If this were to start trading above 38.85, perhaps for the first time in a while, you could buy some strength for a move north of 40. I still think this looks good. As far as the banks, not a bad move today. A lot of them traded above this previous pivot. You look at Goldman Sachs, it also nudged above yesterday's high, so it has some room. Bank of America, which is something that we've been talking about a lot. It actually had a 3-day move, showed a lot of relative strength from this red dog reversal pivot. Could have been a day trade, it could have been a swing trade, and now it seems as if it wants to continue higher. GE, just for something to point out, it's been pretty battered and bruised from this move, into earnings. It's been dribbling, nudging up today. I think that this thing could see, 24-ish or so. If you're looking for something to buy the dip, this isn't an A+ trade, but it's something there. OAHs seem to, wake up a little bit, more potent than some other groups. And here it is right there, boom. It still needs to get above this to get really exciting, but for today it was showing relative strength. Some people were actually talking a little bit about, what were they talking about, Red Dog? Netflix. Netflix still hanging out. Okay, I know that it hasn't run with the market, but it likes to do, be in its own little world here. Overall, acting very, very well right in front of the old highs. Above this 275, it can continue. This was when Barron's did their little bad write-up right there and it engulfed it. That was a nice buy signal, and then from there, continuing higher. Very strong trend, continues to follow it above the 8-day, the 21-day, showing leadership. And with all that said, it is now August 22nd. I know today was a scary day. The NASDAQ was halted. Unfortunately, if you had options, the time decay and that whole situation is probably going to be something debated about with rebates and who's responsible. But overall, if you are long stocks, into that option expiration, I guess you're okay closing the highs. If you were short, you might have lost some time decay to cover. I don't know. That's a whole debate. But otherwise, it seemed to be a non-event. The market didn't get too scared. And to me, it tells me that this bounce could continue a little bit. I know I'm putting myself out there by saying maybe the fix was in and the government was buying all the S&Ps to keep the market up, to not scare anyone, and tomorrow we're going to be down 10 handles. I don't know. But overall, I see enough decent, enough decent charts that there were some things to be long and to stay with. And with that being said, we're coming up on the last week of the summer, so to speak. Lots of people are leaving. I know tomorrow I'm not going to be in. I have positions, but I'll be trading from the road. For the VTF, I'll be tweeting, so make sure you follow me at RedDogT3 Live, just to talk about some of the positions that you could see in this article. It'll list what I'm long right now. Same way if you watch the VTF, you could see me take them off, put them off live. With the spiders, I came in flat to spiders, but was able to buy them in the first 10 minutes versus 164.89, that gap. And if you did that then, you could have made a nice dollar in the spiders. At the end of the day, I took my spiders off because I have 6-7 longs and didn't want to be fully directional just in case. I probably should have put it on as a hedge, but I didn't because this is day one in my opinion, and I think we might have a few more. And with that said, it is what it is, okay? Don't get crazy over situations that are out of your control. Always be even keel, put things in perspective, and you could always analyze data and make it work for your advantage. This has been Scott Radley, T3 Live. Have a great weekend. I will not be here tomorrow. I'm out on Monday. I'll be back Tuesday. John and Brittany will be manning the helm on Monday, and you're in good hands with them. Have a good one.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.